What is going on? Welcome back to Financial Journey. So today when I talk to you on ChargePoint, I want to go over some of the current data points, what's been coming out from the company itself, and what it truly does mean. Before I get into any of that, make sure to hit that thumbs up and subscribe. Always greatly appreciate that. And with that said, let's get right to it. So based on Friday, it went down 5.47%, piggybacking off of the broader market and its fears. But the last news that did come out was right here on January the 10th, and it was ultimately ChargePoint announcing the reorganization to position itself for long-term sustainable growth, which is kind of good. If this happened to any other company, the stock price most likely would have went up. But the fact that ChargePoint, so it's kind of like back-to-back quarters of failed organization, just every aspect of this should have been done like probably and even addressed last quarterly earnings. Because to now find out that you're going to be reducing your staff by about 12%, and this whole reorganization is going to cost $14 million and $10 million in severance, this isn't good by any means. And this does insinuate that their upcoming quarterly earnings, which will be sometime in March, I do believe. They didn't give a specific date, but they just said March. But that does allude that their Q4 earnings is going to be garbage. And I feel like a lot of people were very optimistic about the Q4 earnings, especially considering somewhat hopeful chat, because ever since their Q3 earnings did come out, the stock price just went up. It was completely backwards. I did not anticipate that because based on what was said in the Q3 earnings, stock price should have went down. My own opinion, of course, not financial advisor, but it did the complete opposite. It ran all the way up to $3. So it is backwards. This whole thing is just completely backwards. And the fact that now this came out, which in general, like I said, you take this and move it to any other company, similar to what Apple's doing, moving the whole AI away from California to Texas, I believe. Like every company is trying to cut expenses. ChargePoint, like they should have actually had their shit together right now. Pardon my French. So in reality, this is a very, very big negative and not much hope for this upcoming quarterly earnings. Because if you kind of look at their balance sheet from their last earnings, they had $367.01 million in cash equivalent short-term investments, $301.24 million in debt. And yeah, ultimately, even if you look right here from cash from operations, they're burning through $337.89 million every single quarter. So the math just doesn't add up. They're going to need to dilute. And now if you kind of throw this into the mix as well, just unnecessary expenses, and that does mean that Q1 will probably also be a fail. Because every time a company does reorganize, it takes time, right? It just doesn't go like that. It's kind of a slow process, if that makes sense. So this in among itself instantly wrote off Q4 earnings and most likely Q1 earnings. Surprisingly enough, I have been monitoring what analysts have been doing, and they clearly do not even care about ChargePoint anymore because they didn't update their ratings. They didn't even do anything for this because this news right here should have prompted negative analyst ratings. But again, like they are probably don't even give a crap about ChargePoint at this stage in the game. There's so many other big value plays out there that they are just completely overlooking ChargePoint. So that is completely, it's not good, like I said. But then again, in the past, I have been hit and miss. Like the technicals sometimes are bullish, bearish, whatever else. I really do like ChargePoint. This is why I still do continue to cover it. It just now will be, instead of Q1 2024, as I've been saying, that's probably going to be the optimistic time to buy. But I would actually push it back to probably the safest would be Q3. And from now until Q3, a lot could happen based on this. So if you are a fan of the Elliott wave, while I'm still on Interactive Brokers, it does show in the short term, so within the next month or so, potentially going as low as $1.22 to $1.40. And that's keeping in mind they have a pivot point of 240. So for as long as it stays below that pivot point, then that is what is anticipated. If ChargePoint somehow can put out some good news and get it above this pivot point, then it could touch maybe 393 in the high, 293. So once again, it's kind of just stuck in limbo right now. And all the things I just mentioned is really not incentivizing investors or new investors to get in. Rather, it's making it very easy for shorts. So you can kind of see just this chart right here, and I kind of took off all the unnecessary crap. So this is just the short interest. You do see ever since that reorganization was announced, it went from about 21% short interest to almost 26. And this is something I have been in fact saying over the last little bit, is just shorts are in control of ChargePoint. Plain and simple, so it's not necessarily the best. With today being a holiday, it's not really updating, so of course there's no new shares being traded, but 25.28% of the free float is being shorted, 96.77 million shares overall are being shorted, and through Interactive Broker, short availability does indicate around 1.8 million shares available to be shorted. So shorts definitely do still have a lot of ammunition, so who knows, we'll just have to sit tight and wait. Also, on a side note, if you're looking for a lot of good compiled information such as Elliott Wave technicals, forecasts for upcoming earnings, analyst ratings, take a look at Interactive Brokers for all of this to be completely free. So let me know your thoughts on that. And it is to note though, in this reorganization news, it does say that they still intend on being profitable Q4 2024, and analysts somewhat are hesitant about that because you can kind of see earnings per share being negative 4 cents, and that is based on 4 analysts. So who knows, we'll just have to sit tight and wait. But based on options, so this is the options from Friday, $134,000 in calls being purchased versus 980 in puts. 46% of all the options being done on Friday were bullish. So that's kind of a good thing, even though it was selling off, people are somewhat optimistic. But then again, you have to factor in that shorts frequently use options to hedge, because what they do is they easily double down, as what they have been from what I've shown you on that chart. And then what they do is they just buy a very cheap call option, and then that way if ChargePoint for whatever reason does spike up, then they have that hedge through that call option. So it's kind of misleading, so it does show bullish, but it's really just shorts covering. So that's just my own opinion, of course, not a financial advisor. Of the call options that are being purchased, it is anticipated for it to be above $2 by the end of, it looks like, this upcoming week. And looking at puts, it is anticipated for it to be sub $1.50. Kind of extreme if you ask me, especially with today being a holiday on Monday. So happy Martin Luther King Day, Junior Day, or whatever that it's called. So regardless, happy holidays. Moving on though, just talking on technicals. So like I went over the Elliott Wave technicals, I like to go over support, resistance points, and whatever else. So with it closing at $1.90, it is trading between this S2 and this S1. I wouldn't really consider this S1 broken right now, so we'll just have to see exactly what the market does take it tomorrow, and where it does continue to trade, whether it's between this S2 and this S1, or this S1 and the pivot. So $1.60 we do know is going to be a very strong support. Vice versa, $2.42 is going to be that next strong resistance. And coincidentally, that pivot point is also that pivot point for the Elliott Wave technicals. So you never know, potentially there could be some upside coming with ChargePoint despite all of the negatives that I did say. Obviously, a lot of institutions are going to be scouring the broader market for value plays, so maybe it meets the criteria of ChargePoint, or potentially I might be just overreacting to this news, and maybe the Q4 and Q1 earnings won't be as bad as anticipated. We just have to once again sit tight and wait. The whole EV sector has been under so much scrutiny over the last little bit and just been suppressed price-wise. ChargePoint, no different, has been piggybacking off of that negative momentum. But once that does turn in a positive way, then you could see some upside with ChargePoint. So once again, just giving you the good, the bad, and the ugly. Let me know your thoughts on ChargePoint. Don't forget to hit that thumbs up and subscribe. Always greatly appreciate that. One final thing I wanted to share with you, take advantage of this promo. It is brand new starting today, January the 15th. Simply sign up for an account with Moomoo, throw $100 at it, and you get 5 free stocks. Each stock is valued up to $2,000. So take advantage of this amazing promo. Plus, you can kind of see if you do enroll in the cash sweep, you do get 5.1% APY, which already is better than any competitor out there, but you get an extra 3% APY, and that's just for 3 months. So take advantage of that. Link in the description below and also the comments. With all that said, appreciate all of you watching.